Hi, everyone. Thank you all for coming to our event today about the financial markets with Mr. Blanton. Today, we'll learn about the different types of markets, careers, and just overall college advice as well. So if everyone could introduce themselves in the chat, that would be great. We have people from Austin, Chicago, and New York. So this is one of our community events, which means it is open to any high school student in the Chicago area, as well as JC members from all of our chapters. So we have quite a few new people here. Just as a quick overview of the Junior Economic Club, we were founded in 2014, and we are an entirely student-run 501c3 nonprofit that introduces high school students to business and economics through weekly member engagement events, quarterly economic forums, and ongoing community initiatives with everyone from the Council for Economic Education to Chicago Public Schools. So our club has over 130 members representing 35 high schools across Chicago, as well as chapters in 8 other cities across 4 countries. So you can learn more about the club and admissions at junioreconomicclub.org. And if you're a member, we also have post-event discussions after each event, so you can learn more about that after today's event. So without further ado, I'll pass it off to Leo, who will be hosting today's event, and we'll talk more about how everything will work.
For sure. Thank you, Lizzie. So throughout the event, if you have any questions, please privately chat them to me and indicate if you'd like it to be asked live or anonymously. Events like these really are driven by the questions, so it is highly encouraged if you have one, so please send it my way. But introducing our speaker today, Bret Blanton. Mr. Blanton has been in the financial services industry for over 30 years and has worked in New York, Chicago, Toronto, Europe, and Asia, focusing on global fixed income, currency, and commodity markets. The majority of his career has been on the sell side, working for Credit Suisse, Standard Chartered Bank, and the Bank of Montreal. And within the past few years, Mr. Blanton has moved to the market's buy side and now focuses on global macro trading and investing in all asset classes. Mr. Blanton's sell-side career started by trading within the G10 countries, but then he developed his experience and managed the emerging markets trading team at BMO. He has extensive experience as a proprietary trader and in algorithmic trading, and his team designed and coded several successful strategies that are still used by his firm today. During his free time, Mr. Blanton enjoys spending time with his family, playing golf, and fly fishing, and he attended the University of Massachusetts Amherst, where he studied finance and economics and played on the men's soccer team. So without further ado, I'll pass it off to Mr. Blanton to go over his presentation.
Sorry about that. It's great to be here. Thanks for having me, Leo, Lizzie. I know both of these guys from Walter Payton and working with them a little bit in some of the introductory finance courses and a couple competition where I was an advisor. It's an honor to be here. Thanks for having me on what has turned out to be a beautiful Saturday. But I'm going to start here with a very general presentation. So with people that don't have much of a background in capital markets, hopefully they pick up a couple things, and people that do have a more extensive background, maybe they pick up 1 or 2 things for the Q&A session so that we can dive in a little bit deeper. Let me move over to sharing my screen here for the presentation. There we go. Can everybody see this okay? Leo, can you see this?
Yes, it looks great.
Fantastic. Well, thanks again for having me here. This will be a brief presentation and an overview. This is not meant to be a deep dive at all. It's supposed to be a look from basically 30,000 feet and touch on a lot of different areas. And as we go through this, if you develop questions for the Q&A session afterwards, that would be great. So let's just kick this off here we go. Let's start off with the definition. What's capital markets? Well, capital markets is just like any other marketplace. It brings buyers and sellers together. In this particular case, we have basically, we're going to be buying and selling securities. Let's look at a breakdown of what makes up the capital markets and how they're traded a little bit. So stocks, for example, or equities, are ownership in a specific company. So when you buy a stock, you own part of that company. You don't own a share in that company, you own a part of a share of that company that helps make decisions about the direction of it. The more you own, the greater your influence is. The fixed income market or the bond market is basically an IOU that's given from the company who's borrowing your money to the lender, which is you. They give you a fixed rate of return over a period of time. And at the end of that period of time, they pay you your last interest payment, and then they also return your principal. So the difference between equities and stocks is equities, you own the company, part of the company. Fixed income, you do not. But the plus is if the company does go bankrupt and you're a bondholder, you get paid out before the equity guys do, if there's money left over. The foreign exchange market gives you access to local markets. So for example, if you wanted to invest in a company in Japan and you wanted to make a cash investment in them, you'd have to go buy yen first. You'd have to convert your dollars or your local currency into yen and then go ahead and purchase that company from there. The commodities market, which basically trades mostly through the futures market, gives you access to natural resources like energy, which would include oil and crude and gasoline, agriculture, which corn, soybeans, live hogs, precious metals like gold and silver and platinum. So that's how you would access those types of markets. So let's look at the type of markets that are out there. First, we'll look at the primary market and then the secondary market. Primary market's the initial market that you see when you get out there. They're really supported by angel investors and then the action of private placement. Angel investors are initial investors in corporations that want to get into corporations or companies or ideas before they become bigger. So you start off with these investors, there's a lot of risk involved, so your hit rate is not that high, but when you do hit on something, the returns are astronomical or potentially could be. So imagine being an angel investor in, say, Apple or Amazon or Google or Microsoft before they took off and then they hit into the secondary market or the open market. So that secondary open market is when you're not dealing directly with an investor to that new idea or that new company. Now it's gone on to the secondary market where people can trade with one another with that corporation, but not necessarily have a vested interest in that corporation itself. Like we talked about earlier, when you own a stock, you own part of that company. And then other global exchanges that exist out there, whether it's for commodities, which might be a futures exchange, or it's one of the emerging market exchanges where you need to trade locally to get access to that particular market. How do we value securities? Well, there's a couple different ways. One's fundamental analysis. Fundamental analysis is basically you're looking at a company organically and where it stands competitively. You're not really looking at the numbers of the company per se, but you're looking at where it stands in comparison to the rest of the marketplace. Quantitative analysis is when you start getting into the numbers a little bit more. And you start looking at ratios that exist within that company and how they exist with their competitors and within the rest of the marketplace. Those also might be where the economy stands on a more macro scale. Technical analysis is basically the viewing of charts or the ratios of those prices. So if you're a technician that uses technical analysis, you believe that all market information is priced into that particular security at that particular time. So everything is priced in. So you're looking at historical data to project what's going to happen with that stock price going in the future. And then there's algorithmic trading. So algos are basically set up where you have a predetermined way that you're going to look at the market. And as those scenarios play out, it automatically makes those decisions for you. Now, you don't have to select one of these four as your approach to evaluating the markets. A lot of the times they overlap with one another. Personally, myself, I use all four, and they get weighted in different ways. So fundamental analysis gives me basically an overview of what's happening from a macro standpoint, quantitative to a certain example. Technical analysis gives me, has turned out to be a tool for me to know when to enter and exit markets. and algorithmic trading helps with some of the discipline in finding those opportunities. How do we access the market? Well, cash, futures, and options. So cash is basically taking cash as we know it and exchanging it for the ownership of a company. Futures is a standardized contract that is exchanged at a later date in time. So for example, if you wanted to trade Japanese yen, each contract for Japanese yen is 12.5 million yen. And they come due 4 times a year. So they come due the third Wednesday in March, June, September, and December. That would be an example of a futures contract. Options, on the other hand, they're leverage trades, and they give you, they're an agreement between the buyer and the seller, which you agree on time and contract and price of that specific contract, which will be for a specific time period. This gives you leverage, and what I mean by that is that you pay a premium for an underlying value which exceeds the premium, well exceeds the premium. So for an example, if you buy stock, and let's say you buy a call option, which is the right to own, but not the obligation, a specific stock, and you paid $3 for it, it would cost you $300. But the underlying contract's worth 100 shares of that particular company. Who participates in the markets? Well, let's take a look at this. So banks, for one, ever since the deregulation of the banking industry, they participate in the markets in equities, fixed income, and commodities. They're also heavily involved in the M&A side. They touch on all places, both on the retail side and the institutional side. Hedge funds, they're a little bit more specific. The thing about a hedge fund is they don't require to have the same regulation and oversight as banks and some other institutions may have, and they can act as a more leveraged vehicle. So they tend to leverage more their bets to get higher returns, and good hedge funds make a lot of money, and therefore they can charge higher fees and commissions. Mutual funds are pools of money that come together, and they invest in like securities, which are usually managed by one person or a team of people. Insurance companies, they get premiums for offering security to people on their investments, whether it be their home or their car or their health. So they're cash-rich companies, and they have a lot of cash, and since they have cash, they're looking for something to do with it, and they want return on their money. Pension funds, similar to retirement funds, they're investing on behalf of their clients, which are usually public employees, and they have guaranteed rates of return that are required for them to pay these out. Unfortunately, today, a lot of these funds are underfunded, and that's a function of governmental oversight and maybe a lack of return. And finally, there's the retail investor. This has really come to the forefront as technology has picked up. There's transparency now in the marketplace. Obviously, people can get research. You guys have heard about Gamestop and what happened there. And there's a real movement with the retail investor. Careers to consider in the capital markets. So Leo and Lizzie asked me to drive into this a little bit. So let's take a little closer look. A trader and a sales trader, they both work on the sales side of the business. The trader manages the risk that comes in from the client, and the sales trader manages the relationship that exists between the firm and the client. So for example, you have pension fund or mutual fund X, they want to buy, $300 million, they want to buy $300 million worth of Japanese yen. Let's say the sales trader will work with the client on what the strategy will be and how it will go. The trader will execute and manage the risk for the institution or for the bank. Investment banker, they wear a lot of different hats. They bring companies to market in terms of IPO. They create lending facilities for clients. They work very closely in the relationship between the institution and the client. It's an interesting job that covers a lot of different areas. Portfolio manager, very similar. Well, we touched on mutual fund managers. Portfolio managers could be hedge fund, or they could be pension fund, or they could be mutual fund. They take pools of money and they manage that money looking for risk-adjusted returns that are appropriate for their client. An analyst, Analysts are mostly where, if you guys get into the financial markets, you'll find yourself starting, although some people make a career out of it and that are really good at it. But in general, they work with a team of other analysts and the portfolio manager to determine what the proper value is for a specific security or group of securities or sector. And that could be a stock, it could be a commodity, it could be foreign exchange where you're looking at a country or a region of countries. And then there's a programmer or quant trader. So you're basically programming to put together an algorithmic scenario for the portfolio manager or the trader that is looking for a specific outcome based off of what has the inputs that you put in and the assumptions that you put in. And finally, regulatory officer. This has kind of come and really become a more dominant position after the after the 08 financial crisis. There's a lot more regulation that's in place that's put there by the government to make sure that leverage and companies behave themselves today. So this has actually become a very important job, and there's a lot of resources that are used towards this in terms of corporations. And what used to be something that was important, now it's vital, and there's a lot of resources, and it's a well-paid job as well. So that's it for now. That's a quick overview from 20,000 feet, and I'm ready to hear what you guys have to say. Any questions? I'm ready to take them.
For sure. Thank you for that insightful presentation. Let me just pull up our questions here. Okay, so starting things off, what does a day in the life of the trader look like?
Well, as far as I was concerned, it was very much about routine and being in preparation. So specifically, I would normally get up in the morning early, start my research literally in bed, answering emails and looking at research. By the time I got to the office, I wanted to already be somewhat prepared for what the day was going to look like, because the thing about trading and the thing about investing, it's always important to be ahead of the curve on what's going on. So you want to be prepared for what's about to happen given your day. So if you're a market maker, you want to understand what's going on in terms of current events in the world and what might be happening as your approach to the market, whether it be technical analysis or otherwise. If you're a portfolio manager, you want to understand what's going on in your portfolio. Similarly, you want to understand what's happening with the way you look at the markets and the way you prepare for the market. So there is a saying out there, plan a trade and trade a plan. And the idea behind that is to know what you're going to do before you do it. So more specifically, my day is basically it's preparation, it's execution, and then the end of the day, I usually try to get some exercise, eat well, and then the evening, since the markets are 24 hours a day now, there is the only time the markets really turn off are on Friday afternoons till Sunday afternoons. So since I was in the currency markets, they did trade actively 24 hours a day, so my portfolio was at risk for 24 hours a day, but that's similar to most markets now.
Yeah, for sure. And I'd just like to reiterate that if anyone has questions, to please chat me, and I will try to ask them. So moving on, to what extent do you think the stock market today is a bubble, especially as fears of inflation rise? So this graph on the left, it's of the yields of the 10-year Treasury bonds, which have been increasing lately, which people see as a sign of inflation.
I'm increasingly concerned that we're getting to inflated levels of inflation, or inflated levels of valuation for equities. And inflation's definitely a concern, and it's definitely moved to the forefront of the marketplace. The Fed this week basically we have a little bit of a battle going on right now between the Fed and investors, right? So our people that are managing money, the Fed has come out and said that they are ready to deal with and allow inflation to run a little bit, and investors are concerned that they might not be able to control it. we're in unprecedented times where the amount of liquidity that's being pumped into the marketplace is happening at a rate that has never happened before. So the outcome of this is a little bit uncertain, but certainly the concern now is inflation. As you can see, the backup and the backup that's occurred in the long end of the curve and the steepening of the yield curve would indicate that that is a concern that's going on right now. I don't know if it's imminent, but it's definitely going to be something we're going to have to deal with. I think a lot of the good news is out. There might be some more fiscal reform that comes, or some fiscal spending that comes in the way of infrastructure. But everybody that was going to get $1,400 checks has pretty much gotten them. It looks like the coronavirus is under control and the vaccine is effective, although there's going to be some blips along the way. And the market is pricing in, I believe, somewhat perfection, that we're going to come back and there's going to be a huge roar that's going to take place, and then we're going to have to deal with it. So I think things trade somewhat sideways from here for a little bit, and then we'll see. It really depends. I think if we see 10-year yields lift above 2 to 2.5% into that range, I think you'll see more concern in the marketplace. You'll see models start to kick in that will suggest that things are overvalued.
Yeah, for sure. That's definitely
It's been a heck of a run, though. I mean, there is no question that since March of 09, the markets have returned an incredible amount to people on a rate that's, I don't know if it's been seen at that level before.
Yeah, it's been a pretty long bull run up until the coronavirus hit. So to what extent do you think that artificial intelligence and machine learning will influence the market? I know there's a fair bit of talk among algorithmic traders these days regarding, innovations there. So yeah.
I think they are really I think they're already influencing the markets, and they have been for a long time. So I think there's fast trading that's going on where there's taking margins out of trades. I don't know if that's good or bad for the market. Some days I think it's good, and some days I don't think it's as good. It brings validity to price. I think it's a little bit concerning when you start to see markets sell off because there's not the human influence, and regulation also plays into this, that they can continue to push the markets, which has led to circuit breakers that exist today. So I think if more regulation is not imposed, then obviously algos could play a larger and larger role, and they will likely increase volatility. Very similar to what we saw last March. So we saw things sell off, and it's more difficult for people to take risk as an institution than it was before. And algos are reacting on things that are reacting on predetermined scenarios that aren't accounting for value at that particular time. So yeah, I think things could get extended, and I think they add volatility, and they will influence the market.
Yeah, for sure. So then, obviously there's been a fair bit of interest in Gamestop recently. You can see it's just a graph of its stock price from late February to today. Obviously there's a fair bit of volatility there. There's also been the hearing. So what do you think the long-term effects of the GameStop saga will be?
Two things. One, I think from a trader and institutional viewpoint, I don't think there's that much there's not going to be that much of a long-term effect in terms of GameStop. I think for the retail investor, I think there might be a false sense of confidence that this can happen. I think this was a really unusual situation on a lot of different fronts that what created kind of the perfect storm. So, for example, there was over 100% there was a short position over 100% of the float that was in the market. And I think that's pretty unusual to happen from the get-go. And, it'll be interesting to see what happens with the retail investor, that they're able to come together as one and basically feel like they're taking on the institutional investor. So I think in the long run, I think this is kind of a one-off, and I think it'll be a case study that'll be studied for a long time. I think it's more derived, and I think this is more of a problem from the ability to allow a firm to be short more than its float was. And that led to unprecedented amounts of leverage. And whenever you end up with leverage, you end up with huge blowouts like we saw here. I'm
Yeah,
happy
for
to
sure.
talk about it more specifically if you guys have more questions.
Yeah, so, but I think we'll move on for the moment, but I suppose, what do you enjoy most about your day-to-day job as a trader?
I've always loved what I did. As a matter of fact, when I first started in New York, I couldn't even believe I was getting paid to do what I was doing. It was, to me, the exciting part about it was different every day. And I continue to learn, and I continue to learn to this day. So it could be something about an economic situation, a religious situation. History tends to repeat itself quite a bit. I continue to learn and better my craft as a whole. So I think that overall I continue to be challenged. And the thing I like the most about my job day to day is it's constantly changing. There's a routine to my day, but every day is different than the previous day.
Yeah, it definitely sounds like an exciting position. So I know there's a lot of people are wondering, what type of major they might want to pursue in college if they're interested in pursuing the careers in the financial markets you mentioned earlier. So you have
Are those
math.
the only four choices right there, Leo?
No, it's just some common ones that I know people are thinking of.
I think that, obviously math is an important part of finance. I really like personally if your math have some sort of math built into what you're studying. So if you want to be an engineering major, I think that's a great place to be. I think if I was to do it again, I don't think I would have pursued an undergraduate degree in business. I would have saved that for a more specialized postgraduate kind of degree. But personally, if it was me, I think some sort of mathematics has to be involved. And I like pursuing your interests too on the side. So I think history is really important. I think English is really important. So maybe a major and maybe study engineering with a minor in history kind of thing, if you could do it. I like the idea of pursuing interests as well, because I kind of go from this theory that you can go when undergrad's like this, where you're supposed to be broadening your horizons and taking as much as you can, and then post-grad, or you can also get that through your career. But today, it's more you get more focused to where you're going.
Yeah, that's definitely a good point you raised regarding engineering. So I know you've done some work with the foreign stock exchanges. So which foreign stock exchanges would you most recommend looking into? Which are most interesting? And there's just a few popular ones up on the slide here.
Yeah, I see them. So the thing is most of these exchanges, especially the big ones, overlap with one another. So you can trade seamlessly between them. I think some of the emerging markets areas might be interesting places to look on a local basis. So Brazil, India, China. I think they're kind of interesting places to be these days. Or if you're looking for value, if you're looking for a true economic pickup, there should be good value probably there.
Yeah, that's definitely a good area to look into. So over the past year, there's been a fair bit of movement in the markets. You can see on this graph on the right, it's of the S&P 500 from March 2021, just before the great crash, to afterwards. So how do you think market sentiment has changed over the past year? And I suppose as a follow-up, how do you think it's going to change in the future?
Well, I think there was a great deal of fear that occurred over if you look on the left side of that chart, that was a great deal of fear, and the market was priced fairly closely to perfection at that particular time. This was an unprecedented, and that's an overused term, scenario that was very difficult to quantify. What did this pandemic mean to the world, and what was it going to mean to growth and specific companies? So it was basically a waterfall event that took place. So what that means to me is when people end up losing money in one area, they take from profitable trades and everything just falls on itself. And algos in this particular scenario, I think played a heavy role in the selling that took place. And so over the last year, if you're talking from that low, which is basically we're almost a year away from that to where we are now, obviously we're moving from the lower left to the upper right. So those are about as good a returns as you're going to see over an annual period. So I think there's more confidence in the market. I mean, this was a perfect scenario. The more fear that was there, but invest when there's fear, and buy when there's fear, and sell when there's an abundance of people talking about opportunity. So I think I think it's in a good place. Unfortunately, I think a lot of people get hurt at the tops of markets because if you look at those peaks, everybody's waiting for confirmation, and as it goes up, people slowly get in and get back into the marketplace. So I think the market sentiment is on a retail level, I think it's good. I think on an institutional level, I think it's a little concerned about valuation.
Yeah, that's a good point. And then lastly, we like to ask all of our speakers this: what is your favorite book, and what would you recommend it to us?
My favorite book. I'll say The Perfect Storm by Sebastian Jaeger. I'm a New England guy. I've always loved it, and I don't read a lot of fiction. So this was based off a true fact, a true occurrence. So I kind of enjoyed it. I spend most of my time reading nonfiction, just because I feel guilty when I'm reading fiction sometimes, because I feel like there's so much out there I still don't understand. So for example, like right now, this is one thing I'm reading, and it's all about health, figuring out. And you guys are way ahead of where my generation was in terms of health and diet and understanding what it means to your body. So, but The Perfect Storm is probably, that's one of my favorites, I guess.
Yeah, that's a good recommendation. Hopefully everyone took note of that. So I think now we'll move on to the unmoderated Q&A section. So just as a reminder, if everyone could chat me if they have a question and indicate whether they'd like it to be asked anonymously or live, that'd be great. So kicking things off, I think Ritin Shah, you had a question. Do you want to go ahead?
Yep. Can you hear me okay?
I can.
Yeah.
Great. So my question was, is there like certain like technical expertise that is like advantageous for a successful career in finance?
So yes, but it's nothing that I can say is specific, right? Because I think it differentiates between each person and each trader and each investment manager. So I think the most important thing is that you develop a approach that fits you and your personality. Each person's built differently, and what their risk tolerance is and what they look for in terms of returns, and how they evaluate risk in the marketplace. And that's just something that develops over time. So it develops from reading, develops with networking, working with the right people, and having the right opportunity. Unfortunately, there's no book or one holy grail out there to be able to make money. It's really comes down to about following your approach and staying disciplined to whatever your approach is. That answers your question.
Yep. Thank you.
And then Nikita, if you'd like to go ahead.
Hi, thank you so much for a robust presentation. I think you covered this a little bit, but how do you use data science when determining which stocks to buy and which ones to sell?
So data science is kind of a broad term, I would think, the way I'm looking at it. The thing that concerns me about data, well, the advantage of data science in some regards is that you're able to look at, you're trying to predict what's going to happen going forward, right? So you're trying to forecast what those returns are going to look like, which is what everybody is trying to figure out at the end of the day. That's the name of the game. Let me find something that's valued less today that's going to have a higher value later. And given that, I'll be able to make money. So it's all as good as your input is. So if your input is good and your approach is good, then you should have good results. Data science has been used for a long time. The quant portion of that has really, and coding has really picked up in the last 20 years, especially over the last 10. I've taken my approach that I used to do manually and built it into an algo that gives me, it's a mean reversion model called the Falcon, and there's a couple iterations off of that, but it's something that I thought worked well, improved well, and we back tested and it turned out to serve us well, and we've used it for the last 10 years or so. So if you do have the right inputs and you have the right approach, then there's definitely value in it. But I think the value is only as good as your approach and your input. Bad input gives you bad results. Good inputs gives you good results. Does that answer your question?
Yes, thank you.
You're welcome.
And then Claire, if you'd like to go ahead.
Hi, I thought it was really interesting when you talked about how in undergrad, it's a good idea to pursue your interests more than, well, just to pursue your interests in order to broaden your horizon. So I was wondering, what is the best way to figure out which specific job in economics to pursue? Like, do most people figure it out in college with internships, or do most people figure it out while in the workforce and kind of move through different types of economic careers to find the best fit?
Yeah. Hey, Claire. So first, I would say, in regards to pursuing your interest in undergrad, I just think today that it's supposed to be more of a general education, and there's so much to learn out there without getting too specific. So get specific about what you think you want to do, but like if you want to be an engineer, for example, or you study engineering, one of my closest colleagues, he was an engineering grad from Columbia, and it doesn't mean you have to be an engineer, but you're picking up a skill set at the end of the day, right? He's learned about math, he's learned about approach, he's learned about discipline and how to get to a certain place. In regards to career and choosing the best career for you, what you think it is, I highly recommend getting involved with an internship program. Start your networking early. If you have the luxury of getting into a program that you're able to see a lot of different areas within the firm, I know they're highly coveted and they're very difficult to get into, but that would be a great place to be. Where, let's say you're with a bank, we had a program that, you could look at sales and trading, you got to go to investment banking, you got to see the commercial side of it, and you got to see a lot of different areas, and then at the end of the day, you get to decide where you want to go. But it's all about it. I would put in the due diligence and do the networking, try to get an internship in an area that you think you would want to have. I think it's really important to get out with people. If there's somebody that you find of interest that is doing what you think you want to do, offer to buy that person a cup of coffee, or a Coke or whatever you guys want to have. But just, hey, can I have 15 minutes of your time, or a half an hour, or an hour of your time? And I think that will answer a lot of your questions. I think one of the questions to ask is be really real with yourself in terms of what you think you want your life to look like, and ask what that job entails. So being in investment banking, really time-consuming job, right? 7 days a week, it can be a really lot of hours, especially when you're early on. But when you're on, you're on. The thing I always loved about trading and why it suited for me at the end of the day was I love the routine of trading. So there was a rhythm to it. It opened on Sundays for me, and it closed on Fridays for me. And I knew that, you know what, I had Saturday to myself, from Friday night through Sunday afternoon, basically to myself, to do research, to read at my pace, to do what I wanted to do. So for me, that's where I came, that I would rather be on the market side than on the investment banking side. It was about kind of a quality of life issue.
Thank you.
You're welcome.
And Armel, do you want to go ahead?
Yes. Hello, my name is Armel. I'm a junior at Jones College Prep in Chicago. I had a quick question. So you've been working now in the financial service industry for many, many years and have had many experiences working across the globe. So how would you say your experiences have shaped and influenced the work you do today?
Good question. I think, well, each experience provided me with another piece of who I am today. So it really was about the relationships, the people I met, trying to figure out new approaches, trying to better my approach and craft each time. You travel to different parts of the world and you learn about the values of different systems. And I think if sometimes you get locked within the US, you believe that the US is the best and they do everything the best. And in reality, I don't necessarily believe that's the case, but I grew up here. I grew up in the Boston area. I knew what New England was about, and I didn't think it got any better than that, to be honest with you. But my moving to New York and having experience there, being in Europe, being in Asia, seeing these experiences, seeing these cultures and what they valued and how they went about their day definitely influenced who I am today at the end of the day. So I try to take the best of what I learned in each place in theory. And if I felt like I needed improvement in a place or it would make my process or outcome better, then I would try to adapt it in somehow. So basically, network as much as you can, get to know as many people as you can, and try to have conversations with people that don't have the same view you have. And that's a real skill at the end of the day. So, for example, there's a lot of angst on the political front today. And if you can have a conversation with the opposing side that you have to try to see what they have to offer, and you can keep your cool and think and take something away from it, I think it's a valuable skill set, and that's something you can do locally. And then as you get older and you have the opportunity to see other parts of the world and meet other people, it's a great skill set to have.
Thank you.
You're welcome.
Krish, do you want to go ahead?
Yes, thank you so much for being here. My name is Krish Malhotra from Chicago, and I had a question. So I've been recently very interested, in the Chinese markets. And I was wondering, when you are converting your currency, do you often consider the varying valuations in currencies, and how important is that when you're investing in other businesses that are internationally?
So when it comes to currency trading, yes, I spent a lot of years in currency trade. That's the majority of where I spent most of my career, for sure. But yeah, so it's all about, for me, it's always been about sort of timing the markets and understanding valuation in the currency markets. It's a little bit more difficult and challenging when it comes to emerging markets, especially when it comes to a place like China, because you're not exactly sure of what their output numbers are. So back to the data science numbers, it's hard because you don't know if those GDP figures are actually correct, or those output figures are necessarily correct, or the employment figures are necessarily correct. But it's talking about currency trading a little bit. So there's two parts to probably every market, including currency trading, but there's the speculation side, and then there's the investing side, right? Like if you want to get into a country, and that's where an analyst, a sales trader, a trader can come in handy for people looking to move large amounts of money on an institutional side. As an individual, same idea. I mean, it's real money at the end of the day. If you are long dollars and the dollar rallies and the dollar rallies against the currency you're evaluating, obviously that's real money in your back pocket. That's the same thing as making money in stocks or bonds or commodities or anywhere else. Does that answer your question?
Yes, thank you so much.
And then Grace, do you want to ask a question?
Yeah. So first of all, thank you for your presentation. It was really insightful. I just had several questions. I know most people say commodities run in an opposite trend compared to stocks. Why does this happen, and what is your take on this? Also, how do you think such commodities as oil will be affected by future technological developments? Is there any other commodities that might be greatly affected by such advancements?
So can you repeat the first part of that question?
I asked why commodities run in an opposite trend compared to stocks.
Okay, I don't know if that's always the case, but for example, so I'm not sure commodities always run in the opposite direction of stocks. I'll just start with that because basically if the economy is booming, they need those resources to be able to keep the economy building and the infrastructure. So for example, stock markets moved up, and if you look at energy prices, they've moved up at an equally rapid pace, for example. So in regards to that correlation, I don't know if that necessarily exists. Specifically, people may buy gold or a physical commodity like gold in times of turbulent times, And why would that be? It's because they want to own something physical at the end of the day. They're not concerned about returns, but they are concerned, and this goes way back. And I think it's a little dated, but they want to hold something that they know that will have value at the end of the day. So there's, whether it's gold or whether it's buying Swiss francs or buying yen, in times when the markets are distressed and they're looking for safe havens, those are places that they have typically gone historically. So in terms of commodities and gold, people want something physical they can hold in their hands, so they know if the entire market went completely pear-shaped, they would obviously have something to step out and barter with and buy something with. In regards to, what was the second part of your question?
How do you think commodities such as oil will be affected by future technological developments?
Yeah, so I think personally, I think oil's in trouble because, as we move from combustible engines and we move and we're more concerned about the environment, I'm not sure oil has a place as prominent as it is today. I think, I just don't see the demand keeping up with where we are today. So I'm kind of a seller of oil on all rallies. I may stand, I'm sure there's other people that take the other side of that trade, but from a fundamental standpoint, I just can't see the demand keeping up with as we start to look at the environment more closely. And there's other options out there like wind and solar. And then our automobiles move from combustible to electric. So I think that's a challenging place to be. And timing, like everything in trading, is really important.
Yeah, for sure. Olivia, do you want to go ahead?
Hi, sure. I just want to thank you so much for presenting to us all today. And my question kind of is, what would you consider the most rewarding aspect of your career to be, considering that I'm under the understanding that it could be a little difficult to have a work-life balance in finance career. So I'm just kind of wondering the most rewarding aspect you would say of your career thus far.
The thing I liked about the markets a lot was it was a direct, I knew that what I did was a direct reflection on my compensation and how well I did. So if I did well, theoretically, then I liked that idea. In principle, it wasn't necessarily always the case because you're always part of a team. So if another part of the team did poorly and you did well, that didn't necessarily mean you were going to be taken care of altogether. I don't know. I've enjoyed my experience on a lot of different levels. I enjoyed when I was younger and got to participate in sales and trading programs, and fortunate enough to be a part of those and meet other people, especially senior people that influenced me. From that, I learned that from a lot people that are given a lot's expecting, you should be giving back. So I've been part of mentoring programs, including the gentleman that still codes for me today, was a young guy in high school when he started. And now he's gone through college, went to Harvard, works for an investment firm and about to join a hedge fund. And he's, that makes me really proud to be a mentor and be able to have an influence on those levels. Because the market sometimes can be a little bit one-dimensional in terms of, you do the work, you get paid. And in terms of giving back, I think that's why I like working with like the students of Walter Payton on a couple different levels and doing things like this to maybe give a little bit back and make an influence on somebody that maybe one of you guys one day decide to do this as a living, and maybe this had some sort of influence on it. Maybe it triggered something along the way. So I think from a work-life balance that you talked, I've had a great work-life balance. And that's one thing about the markets, is that you can define your work-life balance, and there's a lot of different opportunities out there, whether you want to be, an analyst, a portfolio manager, trader, sales trader, investment banker, because work-life balance means different things to different people, right? Some people, everybody's wired a little bit differently. So there is a job out there in finance that is and will provide a great livelihood and a great work-life balance. But it's hard to me to articulate on your behalf what that might be or what that would look like, or you may not even know what that looks like at this point. But it's out there. I've known, and I have a lot of friends in a lot of different fields, and they have wonderful, they've had wonderful careers and wonderful lives.
Great, thank you so much.
You're welcome, thank you.
And then we have a couple of anonymous questions, so I'll just start to go through those. What advice would you give? Yeah. What advice would you give to your younger self? What do you say?
My younger self. So this is where I would have changed. I think you take more risks when you're younger, and you should take more risk when you're younger. But in capital markets sometimes, and you work for some of these bulge bracket firms or banks, and you kind of get locked into a program a little bit. So believe in yourself, believe in yourself and don't be afraid to take risks, especially when you're young. Because this system, especially in the US, is built for people to take risks. If you have the idea, and you guys are all really bright kids, students, believe in yourself and chase your dreams. And whatever those dreams are, chase them. And it could, your dream is going to be much different than everybody else's. But if you have an idea, don't be afraid to go get it. And if you do happen to fail, that's fine. Get up and then go get it again, and then go get it again, and then go get it again. Because there's going to be a lot of times you're going to be knocked down that you're going to have to get back up again. And, sometimes the bigger the risk, the bigger the reward. And once again, that really comes down to the individual, right? What do you feel comfortable doing, but feel comfortable getting out of your comfort zone? So that's what I would tell myself today. When I was younger, I feel like I did, but I think now there's a lot more out there to do than, there's a lot more out there that I could have done that I didn't do.
Yeah, for sure. I think we're about out of time, so I'll pass it back off to Lizzie for some concluding thoughts. But thank you so much for your insightful answers to these questions. I hope they helped everyone.
You're welcome. It's great to be here.
Yeah, so thank you so much, Mr. Blanton, for speaking to us today. We really appreciate you spoke at our winter forum panel last year, and you've been a great advisor at Payton over the past few years, and we really appreciate you coming today to kind of not only outline like the fundamentals of the markets, but also your personal experiences, because you've certainly had quite a wide variety of experience in everything from trading to being like having global exposure and kind of participating in many different kinds of markets. And so we really appreciate your career advice and kind of just shaping our perspectives as we move forward in college and our careers. So we really appreciate you coming, and also all of the attendees who showed up today. I know we have a lot of JEC members here, and we also have quite a few people from the Chicago community who may not be members yet, but can always apply. We do have another event next week on the 27th on embracing diversity and inclusion, and this month is focused on gender diversity for Women's History Month, and it will be with the managing director and founder of Girls Who Invest, or managing director of Morgan Stanley and founder of Girls Who Invest, Seema Hingorani. So that's an event that all members are highly encouraged to attend. If you're interested in applying or just staying updated on the Junior Economic Club, you can always find out more on our Instagram at JEC Chicago or on our LinkedIn at Junior Economic Club of Chicago. But we really appreciate everyone coming today, and thank you again, Mr. Blanton, for your time.
Yep, you're welcome. Thanks for having me. Good luck to you all.
Thank you. And we do have a post-event discussion for all the members here who would like to stay after. So you can just stay on the Zoom if you're interested in attending it.
Be well. Thanks for having me. Bye all.
Thank you.
Thank you.